Guys, this is Kevo Doctor's Voice of Reason channel, and today I want you to show you something small on how to do the VAT returns for a company, and I want you just to follow the steps that I will be showing you, and I will be using one of the customers' account to show you how I do it. So you'll just follow on how I'm doing it, and you will get it right. First of all, you have to have the logins for the VAT for the iTax portal. That is the KRA official portal. So you have to have the customer's PIN, and that is the PIN and the password. So for the password, I won't reveal it because this is another person's company. It's not my company. So you have to have the logins for that company, and once you log in, this is what you will get. You will get this dashboard. So for this dashboard, you do a simple thing. You do a very simple thing. The first thing that we do is you check the withholding certificate for that company. The withholding certificate means if the company supplied goods, did the consumer ama the end customer for that product did the 2% withholding of the VAT. So you just check here whether they have the withholding certificate with them for the previous month. Now we are in the month of March, so right now we are doing the returns, VAT returns for the previous month, and that is the month of February. So when you will be checking the withholding certificate, you check for the month that is previous of that year. So we are checking on the February of 2025 to see what returns that we are doing. So this is how you go about it. So you check, you just select the month and the year, and then click OK. So we will have all the all the customers who have withheld any 2% VAT for this company. So we only have one, that is the from KIPI, that is Kenya Industrial Property Institute, has withheld as a 2% for the supplied goods that they got for previous month. So what you do, you just note the date, the certificate date, the invoice number, and also you are supposed to click here. You see withholding certificate number, you just click it here, and then you check whether you check the gross amount for that certificate, and the gross amount here is 34,310. So you just note it down somewhere because you will be using it. Now once you do that, we go back to the portal, and what we do, we just come to returns, then we file returns. You have just you file returns, then select VAT because we are doing the VAT returns, and once you select that, it will give you this dashboard where you have a type of returns, entity type, branch name, blah blah blah. So KRA made it easier for us. Previously we used to do the Excel for 2010 where we downloaded it, then we filled all the details, but now it has been made easier for us who we are doing the VAT returns, because once you select this download auto-populated VAT, itakuja ikiwa imejazwa some details. So what you do, you just download the auto-populated VAT returns for you to get some of the information that is basic, that is already filled. So you just download that, ugoje download, then I'll show you the next step. So those who have been asking me to do a video on VAT, please make sure you note every step down for you to get it right, and don't do any mistake along the way, because once you submit a wrong VAT inakuwa issue. So you wait it for it to download. Once it is downloaded, you just click this folder, inakupeleka to the folder that document has been downloaded to. So you just click that, imekuja kwa download, you just right click. So follow here keenly, because here is where a lot of people make a lot of mistakes. So what you do, the document that you have just downloaded, you select it, unafanya right click. You just do the right click, you do the properties, you unblock. The reason why we are doing this is to allow us to have the full access of the Excel. This is to unblock the macros that is protecting the Excel sheet. So what you do, you just unblock, then apply, then click OK. Yeah, so once you do that, you just double click the document, and it will have two formats. If that company has been active doing the sales and purchases, it will have these two documents. Document number 1 is written CSV files, and document number 2 is now the Excel that we'll be using to do the filing. So you just select the second Excel, that is VAT3 returns, and then the pin of the company. So you just select that, you wait it for you wait it ifunguke ndo tuweze kwenda the next step. So make sure you do the unblocking, the macros, for you to have the full access of that full access of that Excel. So my computer is kind of slow, so let me allow it to load. Maybe I can close this for me to have it clear. So what you do, you open this Excel, then wait it for it to load. So in this Excel, note this, that you're not supposed to do any kind of pasting, copy pasting, or any double clicking. So what you do, you just click once. So the reason why we have done the auto populated, if we could have done the manual one, tungejaza easy, but now because it is auto populated, it has these details already in it, so it will be easier for us. So the only thing that you do is to enter the date of the last day of the month that you're filing. In this case, we are doing the returns for February 2025. So you just do the dating. Then this question, are you a non-resident with no fixed place of business in Kenya? So for this, we are not non-resident, we are residents of Kenya. So you say no, we are not non-resident. So you just select no and wait it to load. So we are done with the sheet A, that is basic information. Then the next thing we do is go to sheet B, that pertains general rated sales. General rated sales means that this company was very busy in the previous month. They did a lot of sales to maybe customers with VAT and maybe to customers with non-VAT. So for this, we have two categories here. For us, it is easier for us because for customers with non-VAT, it's already auto-populated, so we won't be filing it, we won't be auto-filling it again, because you see iko na total sales and VAT to customers registered with VAT and customers not registered with VAT. Simply this means that there is a customer that came into your company to buy something and they are not registered with VAT. Most of these unapatanga ni CDF are exempted from VAT. Utapata maybe an individual who is also not registered to VAT. So any sales that you did in that month that is to customer that is not registered with VAT, the total sales will come auto-populated. For us, it is 281,000, and others who had who are claiming the VAT, now they are the customers with registered VAT, itaapia hapa. Now for this, it is empty. So you remember the document that we did download that has the CSV and has the VAT3. So Once you're done with sheet A, that is basic information, you come back to what you downloaded. We had this Excel and we had this CSV. So you open the CSV. So for this company means they did sales with VAT, they did sales with non-VAT, because you can see we have section B with VAT and section B without PIN, and rather it is section B without with no with the non-registered VAT. So what you do, you open each CSV at a time. So for this case, we are going to open CSV section B with VAT pins to see who are these customers that we did business with, that has withheld some 2% VAT. So for this case, it is only 3 customers. So what we do, we save this as CSV in a folder that is specifically for CSVs. So for this case, I'll save it with the company name and the month and the year for me to be able to identify it. You can save it any name. It's not supposed, it's not a must you save it the way you may save. You can do it on your way. You can also save it any other way. So for me, you may save it for easier reference. So I'll say yes, then I will close it. Then click save, then yes. So once I do that, I'll go to sheet B. Then because it is an auto-populated, we do the import of that CSV that we have saved. You see we have here, kama tungefanya the manual way, tunge add rows, then tuanze kuweka pin purchaser, pin of the name of the purchaser, the ETR serial number. So that is a lot of work. But now because it is a simple one, we'll just do the import CSV and we go to the file that we have just saved as the CSV, and this is the first file that is there. So we do the open, then itajifanya itaji autopopulate, itajijaza, itaji autofill. So for the dates, the format should be the same, and this is the format of the date. So ukipata ikiwa in another way, you have to change it to that format: day, month and the year. So most of the time utapata hizi dates za between date 1 to 9 ziko 5/2/2025. So you are supposed to write them in this format: 05/02/2025. So for this, it means that this company did few sales to customers who are registered with VAT, and the total is 165, and it also did sales to customer not registered with VAT, and maybe probably utapata those are the individuals wenye walikuja without a company. Unajua kuna mtu ataenda kununua something from a company and they are not registered to VAT, so their VAT is claimed under this. So itakuwa the total imekuja 447. For this company, they did sales of 447 for previous month. Then we go to sheet D. Sheet D, this involves zero rated items. So we have items which are exempted. We also have items which are zero rated, and I will explain those in the next video, but for now let me explain this. For sheet D, we have 2 categories. We have section D1 and we have section D2. Section D1 is what we use because this is for the local items, locally manufactured items or locally acquired items. These are the items that have been produced within Kenya, and these are the items that have been grown within Kenya. If we had exports that we import, that we tulifanya sales tuka export, maybe we did a sale that is maybe Uganda, a customer from Uganda did a purchase from us, that is a zero rated section B for export. But now since this company is not that big that they are not yet exporting, we'll do that section D1 only, and that is the locally produced goods. So we will go back to the file that we downloaded, and this is the section D1 with VAT. So we will just open it. You see, these are the items that they sold for that month that are zero rated. Most of the items that are zero rated utapata they are farm products, the vegetables that are exempted by the government to enable maybe a lot of manufacturing a lot of production within the country. So utapata most of them, the zero rated items, they are the items from the farm, direct from the farm. Onions, hoho, we have veggies, we have scales, we have spinach. So these are mostly the vegetables that are acquired from the farm. So we'll do the saving. We'll save this folder and our folder, that is CSV files. So we will do it as I told you, you can save it the way you want, but for me, I have a way that I save them. I don't know whether my format is also okay with you, so I'll save it BER Feb D1 because we have section D1 and we have section D2. So that's how I'll save it and click OK. So I'll say, do you want to keep using this format? I'll say yes, then close this, then say save, then say yes. So once I close it, I'll go back to sheet D and then do the import CSV of that CSV that I have just saved. So I'll open it for it to auto-populate, autofill itself. So once it's done, you will do this. I told you the date format should be 2 digits and not 1, and mostly utapata ni easy dates are between date 1 to 9. So that is the format that you are supposed to leave all these dates. So for other items, there is nothing that you are going to edit. You will just leave them the way you have just imported them. So for this means that they did sales of good that is worth 127 that are zero rated. Zero rated means they are not charged any VAT. Then go back to the CSV and check which other CSV that we have. But you can also use this format. Ukitoka D, you go to E. E is for the sales that are exempted. We have zero rated and we have exempted. Exempted means there's nothing you are supposed to pay when you are doing all these sales of certain goods. Exempted utapata ni vitu kama gani? Maybe exempted utapata you selling to a customer that is exempted from paying VAT. Mostly utapata ni hizi the foreign maybe we can use UN is exempted to pay the VAT, and I don't know that's how that is possible. Utapata zingine ni maybe companies that have people with disability wanakuanga VAT exempt. Then companies like Amref that does the African health or do the donation for health pia wao wanakuanga zero rated for some items, not all of them. So if we did sell to them, hizo sales zao zingekuja to this section E. But now I don't know whether this company this company don't have any sales that is exempted. So we'll just go to the next, that is F. F is now where we start doing the balancing of the purchases, because in business we have two sides of items. We have, it's either you are doing the purchase or it's either you are doing the sale. So for you to balance the VAT that you are supposed to pay, you're supposed to purchase, you are supposed to balance your purchases. The VAT that is in purchases inakuanga inaitwa input VAT, and then you also have to balance your sales, the output VAT. So we have done the output, that is sales. Now we are doing the input. How much did we pay when we were purchasing the goods that we have already sold? And this is how you do it. You start with sheet F that has general rated purchases, and what we do, we go to the CSV that has that information, and this is the items that we purchased and we claimed the VAT. Remember, for them to appear here, that means you have already issued your KRA pin when you are purchasing the items. If you don't issue the KRA pin to the person you're buying from, that receipt won't be valid for it to appear in the autopopulated CSVs. So for this one means the company produced its pin when it was doing the following purchases, and this is a good way because you are claiming the VAT. That means you will reduce the VAT that you're supposed to pay. So for this you do the save as the others. You save it in your folder, the one that you have dedicated for CSVs, and this I'll do the saving of then I'll give it a name for it to be clear and for me to be able to identify it. This is sheet F, so that's how I'll save it. Then I click yes, then I close it, I say save, then say yes, and that's how I go about it. Then you go back to F and you do the import of that CSV that you have just saved, and you just do that and then allow it to load. So all these are the all the purchases that the company did from the previous month. Remember I told you the dates should be in this format, so ukipata ikiwa in another format you're supposed to change it, and you change like that. So allow me to do it faster because time is not on my side. So that's how you do the dates, the formats of the date. If you don't do this, when you are submitting itakata, so you have to change them. I hope you are getting it, and if you have any question, leave it under the comment. I'll get back to you. You can also leave your number if you have more questions concerning this. I'll get back to you shortly. So you have to make sure every date is in correct format, and I guess this one was ilikuwa na mingi, but we'll manage. So all these are the purchases that the company did, and they claimed that VAT. Remember, claiming that VAT means you are reducing the VAT that you're supposed to pay, because you can't pay VAT twice on the same product, when you are purchasing it and when you are selling it. So that's how you balance the VAT that you're supposed to pay. I'll do more videos on sensitizing on this, because I guess a lot of people need this education on how to do the VAT, on how to manage your company's returns, because if you don't do the VAT filing, you get a penalty of 20,000. And that is not worth of paying, because VAT filing takes less than an hour if your company is not that busy. But if your company is that big and busy, it take a time. But for this is not that busy, so you have to make sure all the dates are in that format. That means the company did purchases of 693 worth goods, and the VAT for that was 110, because VAT is 16% of the total amount that you of the buying price. The 16% of the buying price, the buying price should include the 16% of VAT. So 16% of 693, it's around 110,000 for that month. So once you're done with F, we'll go back to what we downloaded to check the next CSV, which is H. H includes the purchases that are zero rated. Just as we had the sales that are zero rated, we also do have purchases of the same items that are zero rated. We also have purchases of the items that are exempted. We also have the VAT that is specifically for the imported services, and also we have VAT for items that are supposed to be exported. So for this, H is a schedule for purchases or for items that are zero rated. So I'll do a video explaining more on zero rated items, and also I'll do a video on the items that are exempted, just to emphasize on what is exempted and what is what we mean by zero rated. So for this, I'll open the CSV for H, and then I save it. Save it the way I'm saving them, and I'll name it H. Name it H and say yes, then close, save, yes. Once I'm done saving it, I'll go to H and import it. So you just import it, and you allow it to load, make sure the dates are okay. So these are an item that was purchased from Naivas supermarket, that is a zero rated item, so it was worth 798. So pia kwa super utapata kuna vitu ziko zero rated that you're not paying VAT for. So once you're done importing all the CSV, what you do, you go to the last page, that is VAT due, just to check your calculation of VAT. This includes itakushow, this one will show you the total input VAT and the total output VAT. Remember, here we are balancing between the input and the output. Input is from the purchases and the output is from the sales. Now you see, for this company, they did a lot of purchases for the previous month, and then they did the sales. So they did a VAT purchase of 110, and they did an output VAT purchase sales of 71,000. So that is well explained. That is then deductible input VAT. That means they are supposed to pay deductible. Deductible means they have already paid 110 on their balances, on their maths, because 110 you paid it when you are purchasing that item. So 110 is deducted from the output VAT. So in this case, the output VAT is 71,000, but the input VAT is 110. So 110 is deducted from the 71,000. That means you'll have a negative, but I will explain later how that goes. So once you do the deductible of 110, you will remain with negative 39,000. Now, this negative 39,000 is what you are supposed to pay. And since it is negative, means KRA is the one that is supposed to pay you. But this is now where the balancing comes in, because in the previous month when you are doing the returns, did you have any balance that was brought forward? So the same thing. This is how it goes. For this company, walikuwa na credit brought forward. Credit brought forward means that pia last month they did a lot of purchases than they did the sales. So that means the VAT for the previous month that they were supposed to pay was also negative. That means they were supposed to be paid, to be refunded 114,000 by KRA. Now, when 110 is deducted from the output VAT, we remain with 39,000. This 39,000 is added to the credit brought forward from the previous month, and that is 114. That means it's 114,000 plus 39,000. Remember, this 114 that is credit brought forward was also negative. Sijui kama hadi hapo tumeelewana, also negative. So that means you are adding 114 plus 39,000 to give you the total VAT that is supposed to be paid, the total VAT that is payable. That means this company is supposed to pay negative 154,000 to KRA. But since it is negative, they cannot pay a negative amount. So that means this amount will be carried forward to next month. Maybe perhaps next month they will have more output VAT than the input VAT. So if next month they get a lot of job and you find the output VAT is now tuseme 400,000 and they don't have any input VAT, that 400,000 will be reduced. This will be reduced buy 154,000 to pay. Now the balance is what they are supposed to pay, but since this amount is negative, so they won't pay the negative 154. It will be carried forward to the next month. So then the other thing that I'm supposed to explain, you remember I told you are supposed to check if the company had any withholding certificate, and I told you that you're supposed to open that VAT certificate and check the gross amount that was there. So for this, they had a one withholding certificate of 34,000, and the amount of 2% was only 687. So that amount should appear exactly the same as here. Remember, this is the total withholding VAT amount that they sold to a customer, but the customer withheld the 2%. So they are supposed to pay, it's supposed to be the same amount that you checked from the withholding certificate that this company have. So this 687 is a VAT that is supposed to be paid. Sijui kama tumeelewana, is supposed to be paid, but since this company already have a negative amount, 667 will be added to the negative amount that we have. So this credit carried forward will reduce. So it will be reduced from this credit carried forward to give us the final tax due. So we had 39,000, which I explained where it coming from, and we had 114 that was carried forward from the previous month. The total is adding up to 154,000 that is here. And then we have a withholding of 687. So since this 687 is added to this negative amount to give us the final amount that this company is supposed to pay to KRA. And since the amount is also negative, so this company doesn't owe KRA any amount for the month of February. So what happens? This balance is carried forward to the next amount, to the next month. So when we are doing the next month returns, this amount will reflect the 154,000 will be now our credit carried forward when we are doing the next month returns. So once you verify, you validate everything that is in that sheet, you make sure everything is okay, especially these are total withholding VAT, you do the validation. You just click on validate. Once you click on validate, itakuuliza sheets are ready to be uploaded. Do you want to generate an upload file? You say yes. You let it load. Ikishamaliza, you go back to the iTax portal. Ngoja imalize. Now it's calculating whether those are sales that you have declared and those purchases that you have declared are okay on the back system of KRA. And now since they are okay, you can now close this and go back to the iTax portal. When you go to the iTax portal here, where you downloaded the autopopulated, down there we have the choose file. You just click on choose file to now select the file that you have just validated, and that is the file. So once you click it, you also I agree to the terms and condition. You can read all those terms and conditions because they are very important. They are very, very important. So once you click on the terms and condition, you submit it and you wait it to load. So that's how you do the VAT. And I'll do another video to handle the questions that you might be having, just to show you guys more on or maybe to sensitize more on how you're supposed to do your company VAT. No matter how small it is, hata kama haijamake any sales ama purchases, you're supposed to do VAT each and every month. Thank you guys. What I can say is just like, comment on my video, and also leave any questions that you might be having. I'll handle the question in the next video. May God bless you. Have an amazing week.